in Nigeria's debt market, we see the infrastructure being changed. The Central Bank of Nigeria says it's fully deployed its Scripless Securities settlement system. That's S4 for government securities. And according to the CBN, this aims to modernize auctions, improve transparency, and will eventually cover the secondary market. And let's look at what this means for traders, investors, and the broader money market. Joining us now is Chuka Nwachukwu, Chief Dealer and Group Head of Trading at UBA. Good afternoon, Chuka. It's good to have you join us.
Good afternoon, William.
Chuka, with this official deployment of the S4, we know we had a test in November, a pilot test, and we're seeing this official statement. Do you see this new system changing how yields are going to be set at auctions?
Well, thank you very much. Yeah, it's a good development. It's quite exciting that CBN is finally coming in, directly getting involved in terms of settlement. The process itself, hasn't actually started. Like you rightly said, there was a test run sometime in November, and then banks have also been in communication with CBN. We've had a series of, trainings, and then hopefully before the end of first quarter, this will fully be deployed. In terms of the benefits for the traders, for the bank as a whole, and then of course the system as a whole, it's going to bring in a whole lot of transparency, more transparency, and then of course it will also help in terms of cost reduction, and most importantly, it helps in terms of settlement. Faster settlement, obligations between the banks, because part of the issue we have with the current system we are using, which is the QS, is the fact that most times, there are a bit of default from one counterparty to the other. So with this introduction of this CBN, S4 is going to bring, faster system settlement, and then of course more transparency, like I said earlier.
Okay, you talked about faster system settlement. This is definitely going digital, paperless. No more paperwork in the books here. But is this going to change maybe how banks or maybe portfolio managers or even dealers in the market manage their liquidity, maybe system liquidity, and also maybe the bid at the treasury bills auction or maybe bond auctions?
Yeah, I think one of the major take here is the fact that all the bids will be real time, and then you get to see what is being bidded for. Of course, also is going to help improve system liquidity, because most banks, practically everybody will see what the system has to offer. As against what we have now, where you practically have to wait for system liquidity to be available, for you to be able to know. So on the liquidity side, especially liquidity managers, it will help to prepare you for liquidity management. It helps you in terms of projection. So for traders, it's also, for a trader, for you to be able to, chat or talk about a direction or a trade of strategy, you must be sure of your liquidity status. And so this will also help in terms of, traders being able to understand what the strategy will be. It will also help market discovery in terms of yield. Direction of the market liquidity determines what is going to happen in the market. So if market is a bit tight, then that obviously yields will be more favorable in terms of a sell. So for us, in general practitioners, and then of course traders, I think it's a general thing it's a welcome development, and then the market is actually excited and looking forward to it.